Good afternoon and welcome to BizTech Asian Midday Market Watch. I'm Samantha Voon and with me is my co-host Brian Fernandez. Let's start by taking a look at the summary of market actions. Over in the US, stock index futures remain flat during Asian trading hours as global investors await key US inflation data, and this is expected to be a significant market driver later in the week. Asian markets displayed mixed performance as investors also traded carefully. While most markets showed little movements, the Japanese stocks saw significant gains as trading resumed after a long weekend. It led gains in Asia with the Nikkei 225 up 3.05%. The index rebounded sharply after dipping into bear market territory last week, and that was caused by the Bank of Japan's BOJ's hawkish signals. Now, what helped restore confidence were the recent comments from the BOJ's officials suggesting a less aggressive approach to the tightening. On top of that, also the weaker yen helped, as well as the robust earning reports from the chipmaking sector that contributed to the positive sentiment. Now, markets' attentions are turning to Japan's second quarter GDP data, with traders keen to see whether or not the economy shows signs of recovery, and this could influence the BOJ's policy decision. Over in China, markets is still underperforming with the Shanghai Composite Index trading within narrow range, as well as the Hong Kong Hang Seng also remain largely unchanged. Now, this week, investors will be focusing on the earning reports from some of China's largest companies, such as Tencent, Alibaba, and JD.com. Now, these reports are expected to provide insights into how the firms are coping with the current economic situation in China. Additionally, traders will closely monitor the key economic indicators such as the industrial production and retail sales data due later in the week for signals of economic health. Brian, over to you for the rest of the updates.
Okay, I'm going to start with India. The Nifty 50 futures indicated a slightly negative open. The previous session was marked by significant volatility driven by allegations against the Adani Group involving alleged collusion with India's security regulator. Now, this is claimed by the short seller Hindenburg. Now, these claims have sparked concerns among investors, leading to declines in the shares of Adani Enterprises and Adani Ports, which in turn weighed in on the broader market. Now, additionally, the Reserve Bank of India's recent hawkish tone continues to influence market sentiment, adding to an overall cautious mood among investors. Now, overall, in other Asian markets, market movements have been mixed. Now, Australia's ASX 200 edged up 0.1%, supported by a slight improvement in consumer sentiment for August. Now, in contrast, South Korea's Kospi saw a modest decline of 0.12%, reflecting the overall cautious tone in the region. The Straits Times Index is up 0.85%, and in Malaysia, the KLSE remains unchanged. And that's it for today's market updates. Now, to give us insights into markets, we have our guest today. She is Tina Teng, independent markets analyst from New Zealand, coming to us from Auckland. Now, Tina, it's always great to have you on the show.
Thanks for having me.
Now, Tina, for a start, we've had a very turbulent 2 weeks. Now, walk us through the volatility and also, is it set to continue?
I think at the moment, investors are reassessing what's going on the markets. However, I think it's too early to say the sell-offs are over at this stage. So this week, investors will be closely watching the upcoming US CPI data. So there's two factors that have been influencing the market's movements. One is the risks for U.S. recession. So there's the bring it up from the recent softening economic data from the U.S. And secondly, there's from the Bank of Japan, the hawkish tightening measurements in the monetary policy. That there was big shock for the markets. However, I think there has been a significant profit-taking moment on the technology shares, which have been surging since October 2023. What I can say now, the US dollar is softening because this widely expected the US Federal Reserve will start cutting its interest rates in September. That's why I think just now it's like sector rotations and investment funds are shuffling around the from technology shares to the other sectors.
Okay, so Tina, I also want to pick your brains on the volatility on the commodity markets. Could you give your insights on what's been happening with the gold and oil as well?
Overnight, from the Wall Street movement, both oil and gold has been surging, especially gold and precious metal like silver have rebounded significantly since like end of last week. There's one is rising tensions in the Middle East, and also the trends of softening US dollar have both boosted commodity prices, especially in gold, is approached the all-time high again. Like for the oil markets, that's a rebound from last week. It's also be due to the like the geopolitical tension in the Middle East, the tensions between Iran and Israel. I think at the moment it's not very common to see both commodities are moving in the same direction. However, as this conjunction, gold is rising as demands for hardened assets, and oil actually is going up just because it's worries about disruptions in production.
Mm-hmm. All right, thank you so much, Tina, for your insights today.
Thank you very much.
This has been BizTech Asian Midday Market Watch. I'm Samantha Voon.
And I'm Brian Fernandez.
Be sure to keep informed with the latest market updates weekdays on 1 p.m. This video and podcast will be on our website, www.biztech.asia, and our social media platforms. It will also be on our syndication partners' TV stations, radio stations, and website. Remember to like and subscribe. Thanks for tuning in.